right, boys. We're live.
Yo, what up?
What up, Biz? Zoo? Appreciate y'all showing up.
Oh yeah,
for
thank
sure,
y'all.
man.
No problem.
Gotta support the boys.
Yeah, man.
That's right.
Appreciate y'all. So, obviously, the talk of the town on Twitter, FinTwit, all that good stuff has been edge erosion. So, obviously, my initial instinct is to talk about Hollow because
Hollowed me out today.
it was brutal.
Yeah, Hollow was fun.
So, yeah, that's my initial thing, right? To get into Hollow. But bypass Hollow a little bit and just go into some edge erosion. So, what I want to do is throw this at y'all and kind of just see where this thing goes. Zoo, I'm really glad you're here because you're solely systematic, right? Like you are 100% systematic trading.
Yeah, and I would actually take it further. I'm 100% automated as well. Like I don't do any discretionary stuff in my trading because, to be honest, like I traded manually for such a long time and I just suck at at taking ad hoc discretionary decisions, and I'm pretty good with data, so I just went that route. So yeah.
Okay, I didn't know that you were 100% automated. And Thiz, you're like you're kind of hybrid, right? Little data, little discretion, little mix.
Nah, man, I'm pretty much discretionary. I just like the setups I trade, would be about as systematic as it gets, but like executing the trades on those setups is quite discretionary, and how I risk it. And, I've seen a lot of these things so many times now that it's like I do better that way. If I see something bad setting up, I'd rather just stop out than to let it stop me out. And
Hey, I'm
kind of go there. I'm very discretionary, bro. Like very, very discretionary. But you'll see things that I don't trade. Like I didn't trade Hollow. And if you were to say
Good call.
it was like some sort of system thing, I don't know that I would say that. It was more of like just things I've seen many times, and so for that reason I was like, all right, I'm gonna leave this one alone. But very discretionary, bro. Always been that way. I tried to go the systematic route and it kind of just wasn't for me. There's a lot of things that I didn't really understand, like I see Zoo talk about a lot of stuff around in the coding world. I see Zoo talk, I see you guys talk about a lot of stuff that I don't really how do I put this, understand on a professional level. So I've been rocking the discretionary thing though. I mean, it works for me and it's not for everybody, but I would venture to say systematic is also not for everybody,
Yeah, you gotta have
full automated is what I'm saying. That's impressive.
Just as a background, I would say that like I didn't come from like a trading background. Like my background has been I've been a coder, data engineer for 20 years prior that I started trading. So for me, this was kind of like a natural way to go because I was very comfortable with coding for my corporate life, if you want to call it like that.
No, that makes sense. All right, so I'm just gonna throw this at y'all. We're gonna get this started and see where this rolls. So, right, like we're talking edge erosion, right? So, what do you think edge erosion is? Like, do you think it's more people doing the same thing, or do you think it's maybe the skill level of the average person is higher than it's been in years past because of chat rooms, because of software, courses, etc.? Do you think it's a combo or just something else entirely?
I think edge erosion could be a couple different things when you actually get down to it. And I almost feel like there's some terms that are like we're using this term for lack of a better term in some other scenarios of things. I think edge erosion is a real thing. I think that it's going to be less of an issue on maybe edges that aren't so thin, versus trading like something like a large cap, thin edges. I mean, we saw what happened with the China liquidation plays, but it didn't necessarily mean that well, that's probably not a great example because even though you could play them, it doesn't really make it worth it, and we've all seen why. But I would say that edge erosion I think is a real thing, and you know, what is it being just kind of a thin edge getting crowded is kind of what I think about when I think about edge erosion, and anything else I just don't really see it as a like a real big deal in terms of something maybe with a little more liquidity, and something that even though everybody knows about it, they might not be able to execute on it how they need to, so there's still edge there when it comes to like the actual entry and exit process.
Okay, Zoo, what you think?
I do agree. I think, I mean, edge erosion for me, it's like a thing that has always been there, in my opinion, in any market. Because for me, it's like trading is about, you know, it's like competing with the guy on the other side of your trade, right? So everybody is kind of like trying to be better than the other one. So everybody is, in my opinion, you know, trying to do something a little bit smarter. So if you have found something that works, you know, the guy on the other side will do his best to, you know, beat you in that game. So I think over time, any strategy, in my opinion, it doesn't even matter. Maybe even for like some strategies in large cap, for example, like, you know, maybe some EP setups that have changed over the past, you know, 3 to 4 years. Any market, any strategy over time will lose some of its edge, but it also depends kind of like what the underlying fundamental of the trade is. So for example, you know, I almost like 80% of what I do is small caps, you know, and I think the underlying thing we are trading is small caps, in my opinion, is like companies trying to raise cash and manipulating stock price, which in the end, at some point, you know, they will sell to the market and the price will go down. So there is an underlying story. Now, within that story, I think it's the execution and your timing, and, you know, and kind of like where you get in, where do you time your entry, where do you get in to short the stock. And I think that might change, or, you know, or like the time span over which a company might run up its price. You know, right now you see a lot of, or at least like a couple of years, you see a lot of these day one gappers, you know, the hot chick, the hot name of the day, but maybe over time that will change to like multi-day manipulation. You never know. But I think over time, any market, any strategy will lose part of its edge. And I think it's your job as a trader to adapt to that change, and, you know, to see these changes happening. Because in the end, you're just competing with the guy on the other side, whether it's, you know, another retail trader or it's a market maker, and you have to be smarter than that guy. That's how I see it.
Ooh,
Yeah.
That's
I agree.
really I like that. I mean, and with what you're saying, I guess in theory, or just, you know, I mean, you never know, but you're saying you think that day one gappers could possibly become a thing of the past. I mean, there's no way that they all could, I guess. So,
Well, I think my point is more like I think it's kind of like a word, like a change is a constant, right? There's always going to be change, and I don't think anybody knows what's going to happen. But I think it's important that you are like constantly monitoring what's happening. So, you know, like I keep a pretty close pulse on what I feel is happening in, you know, let's say within the sub $1 space, or within, you know, like the higher float space. Like how are those sub segments within the small cap space? How are they changing? And does it affect my strategies? I don't know if day one gappers will be a thing of the past. But when you say thing of the past, do you mean like, you know, okay, we see an 80% gapper, I'm going to short it and I'm expecting a fade on the same day? I mean, it can very well be, you know, that the day one gap will still happen, but it doesn't fade on the same day. So maybe it fades over a few days to a certain price point. Nobody knows. I think that's
Right.
the main thing. And I think you have to be aware of this change and constantly keeping like a finger, like a pulse on the market to see what's happening. And if you feel comfortable, like if you have developed like a strategy and you're gonna sit in, you know, you sit in your chair and you feel very comfortable and think this gonna, you know, it's gonna last for, you know, forever. And I think, you know, that's gonna be a very cold shower.
So
That's a
you're,
good.
yeah, I agree. So you're kind of the mindset, right? Like, we consider, I think all of us here, right, would consider edge as some sort of inefficiency that is repeatable, that we can have a certain expectancy on trade after trade, right? I think we all kind of consider that to be edge somewhat. There's a psychology component, other things. So if edge is something that is repeatable, right? So almost by definition alone, would it not erode as the markets become more efficient, right? Is that kind of what you're getting at, Zoo?
I don't think edge has to
Yeah.
be like
Go ahead.
repeatable for it to be like, I see what you're saying. I just something about edge, like I just don't see it as a black and white thing.
And I'm with you on that. I agree.
And I'm trying to find the best way to explain it, and I guess kind of how I'm thinking about it is in terms of like liquidity, even. So like, let's say I post some of my trades on Twitter, and there's some that I don't post on Twitter, you know, but I post some of my trades on Twitter, and like maybe the average person on Twitter is trading maybe 3,000 to 5,000 shares on this particular name or something like that. And so like, even if 5 people maybe come in and trade 3,000 shares, you know, that's about 15,000 shares. You know, maybe this is a lot like lower number than what it actually is, but even still, you know, when you're thinking about a name that's doing 400,000 volume per candle, it's not going to take very much to work out 15,000 shares. And so my point is like me watching level 2 and me watching these charts, like me seeing you know, things on a level 2, like buyers starting to get soaked up on the offer, and all of a sudden like the bids drop out and things just starts to get heavy, knowing that we're super extended and maybe we just cleared out a level and we saw those shorts blow out. Like all this coming together and all these little different confluences, like these 5 Joe Blows shorting 3,000 shares, like they might get stopped out on the clear out, and you know, I'll still be getting in. And this is particularly on the names that are doing like 50 million, 100 million volume a day. You know what I mean? And so when it comes to that, like I think that's why I have kind of a weird headspace when it comes to edge, because like in my head, like edge just isn't just the setup itself. In my case scenario, because I'm super discretionary. However, like I have many different setups I trade. So I think if somebody had one thing that they're trading and one quote unquote edge, and they're putting that on the internet, then they should definitely be worried about deterioration, especially if it's on thinner names. Anyway, I just wanted to put that out there, like, so you guys know where my headspace is with it. Like, I think edge is beyond just the setup. I think there's edge in how you execute. I think there's edge in your stock selection. I think you need to edge is not necessarily something that's repeatable, but it's somewhere you want to be. It's somewhere where the probability of what you need to happen is higher, and there's reason behind that. I think is kind of what I'm thinking about when I think about edge. And like I said, I'm super discretionary, so I'd trade six tickers on a day, you know, and they might not all be like big wins or big losses. Some of them might be paper cuts, but at some point in time I felt, hey, we have some edge here, and maybe I took a trade, and I know pretty quick if the trade is going to work out in that first half of the trade or not. So I have a lot of just get in, get outs. But that's kind of where my headspace is at when I think about edge. I don't necessarily wrap it around just one setup or one strategy. I think there's edge in how a man can or how a trader can execute, and you know, beyond just putting it at a setup kind of value. Would you guys agree, or would you add onto that, or even?
Oh hell yeah!
I 100% agree with that statement, and I think, you know, like if we go back a few days, I think when kind of like this whole discussion about edge erosion started, and I think everything started kind of like, you know, when I don't know if I can say the name, like when a particular tool came out, you know, with the backtesting capabilities online, and everybody started worrying like, oh, you know, like this is gonna end the setups in small caps as we know it. And I think, in my humble opinion, that's a very kind of like narrow statement, because in the end what you're saying is that, okay, then maybe your day one fade the day, you know, gappers might change a little bit.
Exactly.
But then it's like, that's only one very particular setup in the whole small cap space. I trade about like 12 different setups, and they are all automated, and they can hit, at whatever time of day, at random. I don't like. I have no idea sometimes. Like, okay, this is gonna hit. It's gonna enter a trade, and I think like this is saying. I think edge is not simply, looking at the statistics and saying, okay, this X percentage gapper has a like a 76% chance of fading by 15%. I think that's only a very small part of the equation. I think mental stability of executing all your trades consistently, that's part of your edge. And I think position sizing calculation, that's an important part of your edge. Timing your execution is part of your edge. Getting favorable borrow in ratio to your expected reward, if you can calculate that. I mean, all these small elements, I think, in total add to your edge. And I think it's not just, the statistical bias on, let's say a day one gapper or a multi-day runner. I think that's maybe like 20% of the whole.
And that's why
calculation.
edge is such like a vague word almost. And I think what people on Twitter are trying to argue should be more of like an elementary statement and saying like just what it is. Like, hey, is this going to ruin this setup? Or any. But here's the thing is, on like iLag, maybe not the best example again, but when you see something get really crowded and it blows all these people out, what happens afterwards? You just get another opportunity.
Right.
100%. And in my opinion, well, that's for me, that's the same kind of like what Hollow might, provide maybe.
Yeah.
Like there were so many people blowing up, or maybe not blowing up, but losing money on that name today. Why, maybe tomorrow gives you another opportunity and you make it back. Like, but do you have like the mental capacity after you take a big fat loss on the name to come back tomorrow with a clean slate and hit the name again because, your model or your system tells you to? And I think a lot of people will be scared by that name and say, oh no, I'm not going to take that trade. And I think that's part of, I think edge erosion for a lot of people is also, let's say, within themselves, if that makes sense. Like you kill your own strategy by taking a few losses in a row and then tampering with a system. By doing that, you're kind of like eroding the edge that was valid to begin with.
Yeah.
Mm-hmm. Yeah, like what both of y'all. Go ahead. I'm sorry. You got it.
I was just going to mention because I've had people say things to me, and I feel like you guys' opinions, although similar or although different, are more similar than I thought they were going to be. I'd say.
Yeah, I thought it would be like that to some degree. Like I thought we would kind of.
Yeah, I thought it would be. I thought they'd be a little more different, maybe. I mean, they're different, but I guess I know me and Zoo have kind of joked about it. I didn't really know how he felt. I'm one of the guys that post a lot of trades to Twitter, pretty much like every trade I take, except for I have a couple of setups I trade, but two of them I post a lot to Twitter, and I'd like to know what you guys think. Do y'all think that me doing that is really? I mean, I have maybe 1,000 people that follow me on Twitter. I mean, and I don't know, maybe 10 actually look at the post. It might be more than that. I don't know. Do you think that's
a good example? Would be the S-Para that I see some people trading. Verma, I see trading it a lot, and he's talked about this too. And I really liked his post about this. But it goes back into what I was saying. But it's like how many people, you start adding up the volume of how many people are going to be getting in this play. That's a thinner type of play, man. A lot of times that is a lot thinner type of play. And the issue I've always had with those names is it's usually you're shorting them on the first leg. Like there's like just one big leg. I could be wrong. I don't actually know how the system works, but I see a lot of charts like this where they'll just have a liquid name and it'll ramp up on maybe 400 or 500K would be the peak candle, maybe 1 million sometimes. And even if you had 300,000 shares of coming into that market, like extra shares. You maybe one more swipe up, maybe one more leg up to work these people out, and then at the end of the day, you might just get a better opportunity. And so you think about it like that, it's like, okay, well then how can I prepare myself for that scenario if this was to get overcrowded? You start seeing some of these squeeze out, and it's like, this is why I like having the tight stop, you know, because it allows me to go again. I'm not very good at keeping a wider stop and then getting whacked on 10% size of my account, or however people size. It won't take too many times for me to stop out to be done on the day, mentally. You know what I mean?
use a lot more than 10% of my account on those plays.
I really don't. Here's the thing though, because I think once the liquidity becomes so obvious, it's like if there is actually someone behind the play running the play and they know that liquidity is there, I mean, it's gonna get taken advantage of. It's not that's my opinion. I think it's not a if, or it's just a win. You know, win is whoever gonna catch on, and either like you see some of these hyper scalpers, maybe their edge gets regulated, or we have these other edges and they get crowded, and I mean, they're gonna just, it might just look different. You know, there might be another leg now. You know, maybe there's a little bit trappier action. In which case, it's like, I've noticed this a lot where certain setups will maybe seem to be kind of crowded, and this is not like a, I don't know if linear is the right word, like not a linear thing, like some setup could get crowded tomorrow and it could have nothing to do with just the setup, and it could have something to do with the catalyst, you know?
Right. Yeah.
But I think it's fine to post on Twitter, and I think the worst case thing that could probably happen is they just look a little different. And I could see though why being a systematic trader like that would fuck everything up. I feel like.
Yeah.
But from a discretionary point of view, like, I just think that liquidity will get worked out one way or another, because when you put a lot of people in the same spot with oversized, confident they're going to get one thing, it doesn't take much. For instance, okay, like in 21 and 22, you know, you had people alerting stocks and stuff. And I alerted stocks too, okay? Not how these other guys were doing it, but what you will see is like, if there's a really popular guy and he's alerting a stock, and everybody's getting into the stock, just think about the situation there. Everybody's getting in, big size, everybody's expecting the same thing to happen, and it doesn't take very many dominoes to fall before everybody's stopping out. Because when you put a bunch of emotional people in a situation like that and they're oversized, it just doesn't take much. And so, you know, I have seen thin edges completely disappear because of stuff like that. But when it comes to shorting, I think there will still be some sort of edge there, because in order for the liquidity to get worked out, more than likely it's going to go up a good portion of the time, if not just fucking chop sideways for like hours. And if that's the case, you get another opportunity, you know. I really wonder what that's like for Zoo. Like, Zoo, if something like that was to happen in one of your systems and all of a sudden they just started putting in 20% more, or just some last leg to swipe that liquidity out that might be in there, like that extra crowded liquidity, whatever you'd like to call it, would that totally obliterate your systems, or would it not take too much to make an adjustment to continue to be able to play that system?
Well, I obviously over like, I mean, I haven't been trading like for like 10 years or so, but like I started in 2020, so I would think I have a little bit of, you know, like screen time built in these years, and I have seen like some setups disappear. Like, you know, one of the best setups that I played in, I think 21, was kind of like this, you know, overextended day two setup, you know, and then you play the overextended day two gap up and then you short it. I mean, that whole setup kind of like got destroyed. Like, for me, there was like at some point no edge anymore, because I think it got too crowded, you know. I remember back in 21, I was trading kind of like jokingly, and also because I was maybe a little bit inexperienced, like, oh, this is a free money setup. And I kind of like, I did it over a couple of months, and I kind of, I said the ticker, free money setup. I didn't give the specs, but I mentioned the ticker, free money setup. I don't know, like, maybe that's paranoid, but at some point I was thinking, okay, now the setup is not working anymore 6 months later. Did I kill my own edge?
Like you,
And yeah,
yeah,
I mean, probably it didn't, because like I think it was on the radar for a lot of people, and I think even like it's one of the most famous strategies taught by Tim Sykes and Stephen Ducks and stuff. Those are the guys that I learned my craft from, and but I think I do see. Let me put it differently. For me, there is no added benefit on sharing, for example, charts online. Um, and I think I don't know who said it on Twitter. It's like, if there's no added benefit and you're kind of like playing with fire, then why would you do it in the first place? Why would you share your
Yeah.
execution charts? Like, what's the benefit
Makes
for you? Like,
sense.
for me, it's a career. Like, I don't have any other job. This is what I do. And for me, priority number one is just trying to make this career work and make a living out of it. And throwing in elements that might put that career in danger, for me, doesn't make any sense. Like, Twitter for
Yeah.
me is not that important that I would put my career on the line just to have, I don't know, like, because I'm not selling anything. I don't have any DVDs or courses or chat rooms. um, so why would I share these things? And on the other hand, like, I did share like a lot of like statistics and stuff, but I feel a little bit more comfortable by sharing like statistics on a general level, to give people kind of like food for thought. Like, how can I approach the market from a systematic way, from a statistics way, without giving like specific insight into my own setups? And I mean, I have
Yeah.
seen, like, I've been kind of struggling, but it's not really struggling. Like, I tweeted yesterday, like, I hate my account all time high yesterday, but I feel like I'm struggling because I am not experiencing kind of like this parabolic growth for like the last 2 months or so. And maybe that's because I got kind of spoiled in 2023 when I had my first kind of like breakout year. But I feel like the last 2 months in small caps did change a little bit. And I can say that because I think for me, as a system trader, as an algo trader, I rarely make changes to my system, right? So they are all based on like very static patterns and very static rules that I rarely change. So if I see that, for example, my P&L is not growing as fast, or my win rate is, going down a lot compared to, let's say, 4 months ago, then I would assume that my strategies are not in line with the market. So for some reason, somehow, the market, like price action and the whole kind of like bias in the market, has changed compared to, like, say, 4 months or 6 months ago. Because otherwise, I would see the exact same P&L growth as a result for my system, because it's static. So I do think in the last 2 or 3 months, the market has changed a little bit. I mean, for me, I had like a really bad week, like the end of November, when you had so many gappers, and they just kept running day after day after day. And I think a lot of people had a really bad week that late November. And I think ever since then, I kind of feel the market has changed a little bit. Whatever the reason is, I have no idea. I mean, I don't have that kind of market knowledge or market experience to know, like, okay, who are the players, what's happening behind the scenes. And then maybe for you, this, as a discretionary trader who's looking at the level two, who's kind of like really seeing the ins and outs of what's happening behind the screen,
Oh yeah.
maybe that's more visible for you. But for me, it's not, because I purely, trade based on stats and chart patterns. I don't even look at the level two or the tape.
Oh wow. I was gonna ask you that actually when we first started. I forgot. I was curious. Yeah, I mean, dude, I even like keeping up with like pumpers and shit, like trying to know where they're at, to know where that liquidity is at. And
I miss TweetDeck, man. I miss TweetDeck.
Yeah, I mean, it's okay. So I started. It's funny because I started trading Tesla last year, you know, and I wish, dude, that I could just wake up and do what some of these guys do and just trade one ticker and not have to worry about all the little shit that's going on. And that part about a fully automated trading system is very attractive, you know, because you know I do a lot of scalping, not necessarily like some hyper scalping. Like at times it could be considered hyper scalping, but you know I don't want to be sitting at my damn desk 8 to 10 hours a day scalping. Like I don't want to be 45 scalping. You know what I mean?
Nah, man. I don't want to be 35 scalping.
But it's
I'm in Thailand right now, so market opens for me at like 9:30 in the evening, and usually like
wow,
an hour and a half into the trading session, I just go to bed and I wake up at 4 a.m. to see where my positions are.
that's crazy. Can you guys imagine that? Wow.
What time is it there right now, Zoo?
It's like 7:30 in the morning.
Okay,
Ooh,
that's
that's
awesome.
rough.
Yeah.
So I want to throw something up here because this is an interesting comment. He's kind of threw a couple of these out, but I have to throw this up.
I was literally just typing in the comments. I'm about to throw some of these up here because that guy Phoenix Trader, I saw that really stuck out to me.
Yeah, this is pretty tinfoil hat-ish, right? So there's that one right there, and then he's got a follow-up. Right? So my initial thought on this right here, is if H.C. Wainwright has the data from what do you got? TraderView, TraderSync, whatever. I just can't imagine that is making them money because just statistically we know like 90% of traders lose. So how attractive is that journaling software to really make a overarching decision based on what you see in journaling software that might not even be legit anyway? Pretty bold statement.
Well, what I hear when you say that is that 90% of the people are doing pretty similar things.
Could be that too, which is
so I mean it still couldn't hurt to know what 90% of people are doing.
I don't think like any of
but
these
I don't
online
know.
like journaling software platforms would take the risk of sharing data to you know these companies, because if at some point you know word get on the street that they do that, I mean they can close business and they can say goodbye to their 10,000 people who pay like $80 a month. You know, that I don't think they will take that risk.
Yeah, but I mean the guy
once people leave, they can close their business, and the second they don't result of that they don't have any data to sell, so it's only a risk for them. So I can understand like the fear, but I don't think that's the case. I don't think they will do that.
Yeah, I think I as far as saying that's what H.C. Wainwright, tinfoil hat a little bit, but I mean I kind of see like for the China liquidation plays,
yeah, that shit blows my mind.
Once those guys found out, I mean it was just like it's there for the taking kind of thing, like once
there was a lot of chit chat around those being Trojan horsed, and they knew what was going to happen before it happened. So there could be something to that. That was definitely something where I think a lot of people got on the one side of a ticker or a strat, somewhat low volume, and then boom.
So I wanted to touch on something that Zeus said earlier, because he was talking about like sharing a different type of material on Twitter, and I think it's cool, Zeus, like how you do it, man. And I've looked at it even, and because like we were saying, like I believe edge deterioration is a real thing. I might just not have the same perspective on what that is to everybody else, but like even myself posting less charts like going into this year, like I'm definitely not trying to make anything harder for myself. You know what I mean? And I think like the whole posting charts thing was something that really got popularized like late 21 going into where we're at now. And it's raised a question for me too. It's like I don't sell anything, I don't have a course, I don't have nothing like that, but like to some degree I want to remain relevant, just for, even if it's just for networking and meeting new people like you guys, you know what I mean?
Right.
And so trying to figure out what to share without, passing like what I'm willing to be vulnerable with online, I guess. I don't really post P&L too much anymore. And that's just from seeing some crazy stories from people who used to, and like the things that had happened to them, So, seeing your stats, seeing you post your things, I think it's a cool way to continue to post something online and stay relevant, without having to flex the charts.
Yeah, I personally think the stuff that Zoo posts is. I don't follow a ton of people on Twitter, but I think out of the majority of people I follow, Zoo, you post some quality stuff that is helpful to either myself or a ton of people, for sure.
Yeah, maybe the last few weeks I've kind of deviated a little bit from my, serious tone since I've started traveling a little bit more. But yeah, I mean, I feel that's kind of like where I feel most comfortable, kind of like on the data side of things. That's been my craft for like the last 25 years. So, and also I think on the topic you mentioned, there's like in 21, when we had this whole inflow of like, retail speculators, I think for like probably like 98% of them, they were small retail traders, and for them it was kind of like a game, kind of like an online competition. And
Yeah.
for me, this is not a game. For me, this is my career, or at least I'm trying to make it into my career. So my whole approach to this is very different than, trying to show how great my executions are, by showing charts like probably which like, the majority of the people, during the COVID hype did, because for them, maybe they were trading like, I don't know, like a $5,000 or $10,000 account, and it's fun and you can compete with other people on Twitter, you can show off your charts. But I have a very different approach and a very different feeling about like what trading means for me. I have to pay my bills with trading. This is not a game for me. I treat it very seriously.
Yeah, as you should.
Yeah,
I agree. That's the right way to look at it. I have a different perspective though, in some sort of way, and it's how old are you, Zoo? If you don't mind me asking, is that appropriate?
I'm way old. I'm way old.
Okay.
I'm past 40.
Yeah.
Okay.
Well, that when I was
it's
10,
cool.
I thought 30 was old, and now I'm turning 30. And
No, man.
I'm not sure what old is anymore, but.
I just got fed up with corporate life, so I went trading when I was like 42. I'm 46 right now. Yeah.
There's I wish there was some sort of study on this, but I feel like there is some sort of correlation behind like past competitive gamers and successful traders in the current day. I feel like I know a lot of like old people, like people who played gaming at a very high level that do really well in trading.
I think Brian Lee is one of the most famous examples, right? He was like competitive competitive gamer turned into like real, successful trader. And I think there's a few other guys. I think Dux was also like high level StarCraft gamer. And this coder, like the other one of his circles, guys in his circle. I remember.
Yeah, I think he's got a few guys in his room that he's known for years that are from that same gaming circle that are now in the trading circle with him.
Oh, no kidding. He brought him in?
Yeah.
That's cool.
I want to play him in StarCraft one day just so I can see what good looks like.
Dude, I've never been like huge into video games. I'll kill time if I'm deciding to hang out at the desk, and not right now because that's why I've got this background and stuff. I've got just like my laptop and my portable monitor at this little makeshift desk. But when I've got my actual setup going, I'll play video games and stuff, whatever. But I've never been a big gamer, so. And I'm not as computer savvy as a lot of you guys.
That could play a part. I definitely think like trading is not a fucking game, and I've seen people lose their lives, because of trading,
Yeah.
or because of mental health issue or something. But like trading, blowing up so I know it's not a game; it's a very serious thing. But I think there are mechanics that are similar, and
I
the
agree.
competitive nature is very very similar, I would say.
Yeah, you
before I
touched on it.
You go ahead, Craig.
Well, I was just gonna say, Thiz has touched on this a couple times about the mental aspect, both in what he just said and then edge in general. So I know of just a couple guys that trade at like 7 points, for example, and
Okay.
they have never used Excel in their life. They have never tracked much of any data in all of their days, but they're very successful in trading just because they will say kind of what you Thiz said at the beginning, as far as edge is somewhat of a psychological component. They know in their head that when something is present, they can execute without question, without hesitation. Then they start reading that tape and getting the
Yeah.
feel and can cover or whatever they're doing, long, short, whatever. But I mean, I guess I'm just saying the mental component is absolutely huge. And then when you talk about edge deterioration from a mental component, that's just within oneself at that point. So
But I
there's
think
no
also like even let's say even if you are like me, even if you are a system trader or an algorithmic trader, it doesn't mean like the whole mental aspect all of a sudden is gone, right? I am struggling every single day trying to keep my emotions in check when I see the algo running, taking positions, and I see it go against me. Like I have to force myself not to interfere, like, and don't touch the buttons. I think, and like especially, when you have a few red days in a row, like, oh, am I going back to my system and try tamper with the parameters a little bit, or am I going to, trust in the long-term backtest results? So I think definitely like the mental aspect of sticking and consistently executing the trades without question, whether it be you're a discretionary trader or a system trader. I think that component is always present.
Very
That's
good
definitely
point.
a fair point, because we've known and seen, and people have talked about it on Twitter or in our own pods that we're parts of, where systems go through drawdown, and then people want
100%.
to,
Yeah,
yeah,
definitely.
they want to scrap the whole system or take it back to square one, when in fact maybe it's just a momentary period of a drawdown that they cannot handle mentally or emotionally. So then they scrap the whole thing, or even try to reverse engineer and say, all right, this isn't working short, let me try to flip long, or vice
Yeah,
versa.
and by the time you flip long, then the market changes again, and your initial system starts
Yeah.
working again.
Yes.
So you're always behind the curve. So for me, I always choose to, okay, I'm gonna stick with my thesis that I have, and I have backtested over like multiple years, and I know like over time I will have periods of drawdown. And I think I think it's important, like people really underestimate, I think, kind of like this aspect of risk of ruin, right? So if you are risking, let's say 10-15% on each trade, and you go into a period of drawdown where you have 6, 7, 8 losses in a row, or maybe 4 days in a row, like, are you really okay having a 50% drawdown on your equity? Is that like how you want to approach your trading career? Like for me, that's completely unacceptable. So yes, I've spent like the last 4 years trying to build like this small account up, and I've taken extremely long, like probably much longer than anybody else, to build that account to some level. Some people might have done the same thing, within 6 months. But like for me, like the risk management part was also like always very important. Uh, and I think that aspect is also like part of your edge. Like, don't get carried away, by your greed of risking 10% or 15% on a trade, because in the end, that will probably kill you at some point when the system goes into a drawdown.
Kelly giveth, and Kelly taketh.
Exactly.
That's right. That's why when I think back on when you might remember when me and you, I don't know if you're still in there, Zoo, but I used to be in Verma's room, and that's where I first found out about you.
Yeah, I'm still there. I'm still there.
Okay, but yeah, I remember you would a few years ago, whatever, you'd be saying potential free money setup tomorrow, and man,
Yeah.
I was trying to do the fully systematic thing, and I was just getting destroyed because I just can't. I realized that I couldn't stomach letting it go that far against me, and then actually taking the loss. Like when I'd see,
Yeah.
you know, stuff turn into, you know, at times, you know, negative 5 figures or whatever. I was like, okay, I can't do this.
But
So that's why.
I think that's then not really like a an aspect of, let's say, I don't know, like a wide stop system, but it's a consequence of oversizing. I think that's the issue.
Exactly. Yeah, and that
And
was
for example, when you only have, let's say, I don't know, like 2 or 3 setups, right? So let's say you play the big gappers, and let's say you play the overextended day 2, and you only have 2 or 3 setups, and your frequency is low. I can understand that at some point you get kind of like anxious to put on trades, right? Because you want to trade in a month, you want to generate some results. But when, for example, you have maybe 10, 12, 15 different setups, you can allow to size on each setup much more conservatively and have a much higher frequency. And by doing so, have a much more like stable equity curve growth over time.
Well, and what I've learned to do now is just I don't have that many setups, but I do size big like I was on these setups. I just think I think my edge is that I'm just better trading now than I used to be.
Yeah.
But I don't do it the same as I used to, like with the wide stops. So I don't know. That's like you're saying though. It is easier when you have more frequency. That's for sure.
I think that helps. Yeah. Yeah.
That's definitely a valid point. So quick question, Zoo, if you want to answer. People are asking, do you use Kelly in your algos?
No.
I don't blame you. Kelly get it. Kelly take it. I will say though, and no disrespect to Verma, I think I've seen his Excel stuff alone blows my mind. Dude's a freaking genius when it comes to that, and I wish I had a fifth of that knowledge when it comes to Excel, because I love Excel, but his stuff makes me feel stupid. But I was really surprised to see him say, because he put out a big thing about edge erosion, and he basically was like, nah, it doesn't exist. I've been sharing data and all his stuff for years, and he's comfortable in saying that edge erosion doesn't exist. Then you got other people on the other side of the coin that are like, if you don't believe it exists, I'm eating your lunch. So it's funny seeing two.
It's true, but like I think, because I know Chris a little bit, but what he does actually is he does keep like a pulse on the market. So when he sees some things change, over the past 2 or 3 months in the market, he will adjust his systems. So in that sense, he might not see edge erosion for his systems because he is actually adjusting the systems as the market changes.
Yep.
So that's a good point, because then it's almost like he's not calling it edge erosion. He's just saying his system needs tweaking and he is adjusting to what the markets are giving.
I think Twitter
at least that's what I understand.
Yeah,
I think Twitter forgets sometimes that it's different strokes for different folks, man. There's a million ways to make $1 million, and what's right for one person might not be right for another, but it doesn't necessarily make them wrong either,
And I think also like we have to understand like the whole social media aspect is very much it tends to be very much left or right, black or white. It's kind of like you believe in it or you don't believe in it. And it's like, because you have to kind of like choose a side, I feel sometimes on Twitter, you're on this camp or you're on this camp, when actually you come together like we do and you like discuss it a little bit more. Like the truth is very much more nuanced, kind of like in the middle, and kind of like it always kind of like depends. It depends on the situation. But that's obviously usually you cannot put that into words in 140 characters. That's what I feel.
Yeah.
Yeah. And then the problem I have is if somebody's tweet goes over 140 characters and I got to click to expand and see the whole thing, I'm like, I struggle to do that too.
Yeah. Well, I'll tell you what, at the end of the day, I probably, like, zoos got fully automated systems, 10 years from now, I'd probably prefer to have that going on. Especially since, like, when you're discretionary, the mental is like a huge deal,
Dude, it can
Any-
be,
Anytime
market
I
can
was
be
ever in the hospital, I was red.
Oh, yeah.
23 wasn't super profitable for me. I was like depressed the whole year, and like that was a big deal. It hurt me a lot. Like my performance was not good, and for many reasons, lack of sleep, not getting up early, not, prepping, just a million things.
Yeah, I think a lot of like kind of like these OGs, like people who are like well established in the business. I think they will say like discretionary traders, they will not do it like after they're 30 or whatever. It's kind of like as you grow
After that,
older,
yeah,
right? It's like it's such a mental um, burden on sitting behind the screens for 6.5 hours a day, plus doing all the study
yeah,
before the day, after the day. I cannot even
all
start
the
to imagine.
review.
Yeah, I mean that's super tough, and that's also why if that was the style of trading I had to do, it wouldn't be for me because I cannot handle that kind of mental pressure, like day in day out.
Gotcha.
That's a valid point. I like that a
Yeah.
lot. That's I,
It's
So
like
I
when it's
will-
good, it's good, but when it's tough, it's real tough.
Yeah,
Yeah,
Being
and I-
discretionary and having a bad mental. And I guess a fully automated system can't go on tilt. So that's kind of cool.
no,
It
it's,
can go until true, but you still have like today. Like today, I had a pretty big red day, but I still feel it. I still feel it mentally. Like
Yeah.
I have to come again tomorrow.
So it's like a
during the
different
algo
kind of
one,
mental
and
battle almost. Because are you saying like days like that happen and like just you really gotta have the mental just to believe in your system kind of thing and like
yeah,
to keep it
it's
running?
kind of like when you develop a system and you do, let's say, a 4-year, 5-year, 7-year backtest or whatever, like long time period, and you have a significant sample size, and you draw your fictitious, like your equity curve growth over time, and you see like 2,000 trades, you don't see in that equity curve those teeny weeny days that you actually go into a 7% drawdown. Like, in the big scheme of things, when you look at that long-term equity growth, they are blips on the screen. But when you actually live through it, like for me, for like today, it's very real. And that part is, that's not, it doesn't expose itself during a backtesting phase of a system, how actually those drawdowns feel. And when you
Right.
actually, I think you have to just experience a few. Like I had a pretty bad one, like late November, and the system recovered after, in a few weeks. It was totally fine. But like living through that drawdown is an experience I think you have to go through, even at like how it feels as a system trader. Because otherwise, it will never be kind of real, and you always think like, oh, the equity curve looks great. I have a 2-point X profit factor. It only goes up, and unfortunately, it doesn't work like that, and you have to feel it.
That's very
It's-
true.
yeah, that's interesting. I wonder if that's. I know you've been very conservative with your sizing and risk management and all that, but I mean, I know I'll have weeks, where it seems like nothing's working, and I'll get kind of down, and I can feel it. Like sometimes I try to control this more with the further I get, I can kind of feel it like transition into family life and things like that, where I'm like not as happy when I'm, even when I'm done trading or whatever, where it's like, man, nothing's working. It's just sort of working. But I imagine when like your system's really having a bad time, I mean, which, because I'm not fully systematic, so I don't know, but I imagine it probably feels something like, I mean, I've had fairly large accounts like back. I haven't done this in a while, but I mean, I can't do it now. Well, can't. It could, anything happened. But back in like 21, where I've like full blown liquidated like a big account, like a large 5-figure account. That's, I mean, living through that is something that's extremely painful. So,
Yeah.
I mean, you can put yourself in a terrible mental spot. Like Tiz was saying earlier, talking about people losing their lives and stuff. I mean,
Yeah.
I'm not going to do that, but I could see where that would put somebody like that because it's so mental. So
Yeah.
I think a lot, I'm sure having periods like that with even though it might not be as extreme with your systems having like a major drawdown that you might not see zoomed out, but when you zoom in, it's real and you live through it, that it could be, I don't know.
Yeah, but even like not even like drawdowns, but let's say you have a 2-month period where you just go sideways, you just go flat and choppy, and I think that's also very dangerous because you think like, oh, what am I doing wrong, and then you start tampering with your system, and then that what should be a flat period actually goes into a drawdown. It's like everybody wants their P&L, their green days. Everybody wants to win all the time, but like even flat periods can be such a mental drag when you don't know when you're actually breaking out of that flat period again. Like I've been going flat for like past probably like 8 weeks or so, like especially after like the last trading session. And that's tough because like I'm thinking like, okay, where's the growth? Like, and is the market changing? It's like, is the edge eroding that I had? Like, but I see a little bit of signs of market changing, but I don't see enough proof for me to actually start changing the systems.
Ooh, that's a good question. That sparks a good question there. Is like,
let me throw it in there. Like, when do you actually feel that your edge has eroded, or how long of a time period do you want to see some kind of like market behavior against your thesis?
It's a really good question, and I think we would probably all have different answers if I were guessing.
I want to hear Zoo's answer.
Well, I rarely change my systems. Like I keep kind of like a 6-month trail on my let's say performance, on my backtest performance. But I rarely change my setups because I test my setups, let's say over a 5-year period. And some setups, like I traded like the day two, overextended day two for a while, well, that it went into a drawdown. And at some point, kind of, I saw enough samples that I said, okay, the past 3 months, I only get like 42% win rate on this setup. This is not enough for me to continue with a pattern. And then I would turn it off. But for like the majority of the systems that I trade, I don't see those kind of numbers, so I will continue to trade them. When I see them fall below a certain threshold in terms of performance, then I either might size down. I will rarely turn them off, but I might size down a little bit to still be in the market. So when, for when it does turn around again, I can be able, I'm able to size up again. But I rarely turn systems off, and I rarely change models, because I wanted, for me to actually change a model, it has to change behavior for like probably like 3 or 6 months. Then I might think, okay, maybe this pattern is not working anymore. And because I trade so many patterns, like my overall P&L rarely gets hurt like significantly by one single setup, because I put like a lot of small, bets on many different systems. And then one might overperform, one might underperform, but in the end, it's like kind of stable.
Okay.
The more I hear you talk, the more I'm like, let me just figure out algos and just let it roll.
Yeah.
I know, easier said than done. Like, I know, easier said than done. You put in probably who knows how many hours into those systems, and I'm sure the mental head game.
It's not even hours. I would say it's like, accumulation of like 20 years of my corporate life that led to this point. So like I get a lot of questions like, oh, how can I start with like system trading or algo trading? And I'm like, dude, like it's so much work and it's so complicated. I haven't like built a system like solely in isolation. I have like a group of like close trading buddies that I built a system with, and they are extremely knowledgeable. And I think like it's very hard to do this by yourself. And if you want to go this route, you have to find extremely knowledgeable people that have a ton of experience in coding and programming and all this stuff.
Man, I've loved watching you just the adaptation and the just how you. I mean, just over the few years that I've followed you on Twitter, just how much you've changed, and I don't know, it's cool just because it's a lot different from what I do. I've loved watching how you do, Zoo.
Appreciate it. I will make like one remark though on because we talked a little bit about like Chris Verma, and I will say that like I'm still in his room, and a ton of what I do, I learned from him as well. Like on the statistics side, and I think over, the course of like your career, you will pick up so many different things by different people, and in the end it all comes, it all falls together into your own style, I think. But I did and I do learn a lot from Chris still.
Oh, dude, I attribute Chris like a huge portion to me becoming successful with, or I guess really dialing in something that was more repeatable. Because I learned one of my best setups from him, and I've somewhat changed it for my own
Yeah.
metrics and things like that. But I really like Chris, and I learned a lot from him in the short time that I got in his room, and dug into all of his data and just the way he trades, and that style. Um,
Yeah, man, that Chris guy fucks.
He does.
he
And
does.
his beard is glorious.
I know, dude. He's got man.
He
It's
does
like-
have a pretty nice beard, huh?
Legit.
Oh,
All right,
Yeah.
so typically we try to keep these within an hour so we don't just absorb everybody's time. And obviously, I want to be respectful of y'all's time. I know y'all got kids, families, this, that, and the other, but I do want to kind of leave off with this. So, edge erosion, obviously, that's all we've talked about. But do you all feel like collectively, right? Is edge erosion largely just an excuse for people's failure to adapt to the markets that have significantly changed since, let's just be real, COVID market was euphoric. You could about buy anything at any point and it continued to go up. And then there were so many pumps that were so artificial that you could just get in short. And I mean, it was super nice.
Yeah, I feel
The
like a
slope
lot of the
would be-
people that haven't adjusted from 21 probably aren't here anymore.
I
Unless
agree.
they
I
made
think
a
a lot
lot
of
of
people
money.
disappeared.
I think it's more of like we agreed edge erosion is a real thing, but for people to just sit and like blame everything on that for their lack of success in the market, I think it's just like almost like a confusion, almost like a
Coping
like
mechanism.
a bad focus kind of thing, That's what I would say about it.
What do you
Yeah,
think?
I think, as I said like earlier, I think if you really want to be like successful in this field, and I am, I am far from like where I want to be, or like what somebody would call successful. I'm not nearly there, but from my viewpoint, if you want to be successful in this field, I think thinking, like I said earlier, if you develop a strategy or a system or some kind of like pattern, like repeatable pattern that you see and you think, I have identified it, I can now sit back and just trade it without thinking. I think that's just fooling yourself, because I think the market is always changing. And I think your job as a trader is to identify kind of like the most, repeatable pattern in, let's say, an X, in within the last, I don't know, like period of time. Because like I said, some setups will come, some setups will go. We had a significant change in setups in 2023. If like probably a lot of you also noticed with these super turfs, right? Like this was not a thing back in 2021, but these things came, and become really active in 2022, 2023. And if you are there in time, you can adjust your approach and take advantage of what I call these inefficiencies. I remember like late 2020, was it late 2021, early 2022? There was a like really big mania in the OTC markets, and it lasted for a very short time. And I think there were there were a few very successful traders, you know, taking in millions in that market. I think Jack Kellogg is one of the most
Yeah.
famous ones.
Mhm.
He made so much money because he was like trading also, like he had a lot of experience also coming into that market. And then when the whole OTC market kind of like melted up, everything was running, like things going from like half a penny to 30 cents. If you were prepared and you picked up on those early signals in like November, December, you could have made a ton of money. But that strategy, that market died as fast as it came, like within 3 months or so from like the very first like early signals until like the utter collapse of the OTC markets. It lasted, I think, only 3 or 4 months. I was trading it maybe for like 6 weeks, but I think your job as a trader, the point I'm trying to make is like you have to be like always scanning the market, see changes, and when you see an opportunity, you cannot be like, oh, I'm gonna forward test it for 1 month, I'm gonna forward test it for 3 months to see how it acts, and then I'm gonna, throw some money in it. I think with a lot of these inefficiencies, once you see it, maybe look at it for like 1 or 2 days and you just jump in with, you know, risk management always. But like you have to jump in these inefficiencies and take advantage of these opportunities because you never know when these things, disappear again. So I think like edge erosion, yeah,
Yeah.
OTC, that whole edge, it kind of like eroded as quickly as it came. It lasted maybe 3 months. So I do think edge erosion is a thing. But I think like edge, what's the opposite of erosion? Like edge always also comes, right? There's also new edge coming. So I think
Yeah.
you don't
And
have to
who's
be
to say
focusing on
that
edge
that
erosion. You also have to be like always looking for new opportunities to arise. So I think that's maybe a positive twist on the topic.
I think it's worth adding that who knows, dude? Maybe it comes back around sometime and you got to participate a little bit, so maybe you'll be more familiar whenever it comes around some other time.
Who knows?
Isn't
Yeah.
that what Tim Sykes always says?
I don't know. If he does,
I mean, I think everything in nature is cyclical, markets included, largely.
100%.
Even whether it's small cap. I mean, what you were talking about with OTCs. So I traded almost nothing but OTCs in 2019 and early 2020. And you're 100% right. I don't even have OTC scans anymore. Those markets are
I
so
run it maybe like once a month. I run it, but like
disappointing.
the market is dead. Like there's nothing going on there.
It's gone.
Not
But,
worth
I
the
mean,
time right now.
yeah, you were right. Like you'd have sub pennies going to a nickel or a dime in a couple days, and you
Yeah,
wouldn't
it was
be
crazy.
10,000% gains weren't off the table in OTC land in the course of a week. It was ridiculous. But yeah, that market.
And you could get away with murder. Like I was like completely inexperienced, and I just threw market orders at the OTC market, and I got like 15% slippage, on the upside going long, because I had no clue. I had no clue how these, how the OTC market worked, but I got away with it. So I guess I was lucky in that regard. But like, it doesn't matter. Like the opportunity was there, so I jumped on it. But I think you just have to be always scanning and always be looking, you know, test different markets, test different strategies. Some strategies come, but also new strategies, they go, or like new strategies come, old strategies go. So yeah, and I think you also have to enjoy the process of doing this. Like if you don't like, doing the research and doing the study, then I don't know, like then trading will be it will be a drag.
yeah, I agree.
People love
I
your
agree.
setup, this.
Oh, for real, dude? Thanks, y'all. I'm listening. I'm here. I'm kind of spacey. I'm just sitting here playing this game,
You're
but
good.
I agree,
You're
man.
good.
You're very well spoken, Zoo. I agree with a lot of what,
Sure.
like 99% of shit you're saying, man.
Well, it's
Oh,
an honor to
maybe.
be, talking with you guys here. So I've been following
Likewise.
all you guys for like a long time, and yeah, it's motivating.
Oh, I
Right.
love talking to you guys, and I feel the same way.
Yeah, and
Yeah,
I
man.
like
We've seen a
hearing
lot of
all
people
y'all.
come and go, and I'm glad you guys are still around, and hopefully we can, you know what I'm saying, see each other 3, 4, 5 years from now.
Exactly. That's what I'm
Yeah,
trying
and
to do.
hopefully we're not getting hollowed out.
Oh
Yeah.
man, dude.
Zing, dad joke.
Too soon.
Oh yeah.
All right, fellas. Well, we're over an hour, so hey, seriously, Fizz, Zoo, can't tell y'all how much we appreciate y'all, man. This was awesome insight,
This
and
was fun.
it's super cool hearing like obviously differing opinions, right? Because discretionary, systematic, but then how y'all meet in the middle on so many things is pretty wild when you talk about some of this stuff, even when you come from such different styles of trading. So it's pretty crazy how we have so many differences and similarities at the same time.
I think it's cool, man. I
It is
think
super cool.
what it highlights is that there is, whether it's not set in stone of what exactly, but like there is some kind of foundation there between like traders who have found success and what they value, you know, or what's
That's
important to them, and what there's some universal things, you know, regardless of full, you know, automated or even discretionary.
Oh, for
Yeah,
sure.
I think a lot of traders they struggle with the same things, but I think like how they approach the market, I think it's mainly a result of like where their strengths are, right? So like you are probably like you're really good at like tape reading level 2, making really quick decisions. You know, that's one of my weak points. You know, and I think everybody kind of like uses their own strength in the market to, you know, try to extract alpha.
Right.
I'm gonna put this up because I think this is a pretty good point. What helped me personally was Trade the Matrix blog post about market cycle analysis. Your edge can thrive in the right cycle and struggle in different cycles. Valid point.
Yeah.
100%.
That
Yep.
Zoo, you might have answered this earlier, and I think I was typing the question when you started talking about something related to the question, and that's why I missed it. But regarding like cycles, and kind of what you were saying is like once you realize it, like you probably don't have that much time to really press into that. I'm sure that there's cycles for your systems where something is you're seeing it maybe a lot more, or seeing that it's just working a lot better. Is it easy for you to just like change your sizing on those setups to take advantage of those cycles with your full automated system as well? You might, like I said, you might have already answered this, but
Well, I don't like. I have a pretty constant sizing method. So let's say my system is not like, or the cycle is not aligning with the system. That's how I usually try to describe it. I don't like size down in like dollar terms on those during
okay,
those cycles, nor do I size up in dollar terms in cycles when I'm winning a lot. I adjust my, you know, size every single day based on a percentage of my equity. So
okay,
when I go in a drawdown, I naturally size down automatically because I keep the percentages the same. That's all. That's all part of like the system.
okay. So it'd be more of a frequency thing than
Exactly. Yeah, yeah. So like, for example, when we don't get a lot of gappers, right, or we don't get a lot of parabolic runners, I would just have, you know, maybe one trade a day or two trades a day. Like the frequency will go down a little bit,
gotcha.
and then kind of like the edge will be more spread out over the month. Whereas if I have a cycle where, you know, you get a lot of activity in the month, then I might have, you know, 5 trades or 7 trades in a day, you know, and then then the frequency goes up a lot. So for me, it's more a result of like, or it results in frequency much more than in, let's say, the net returns.
Right. Okay. Interesting.
Yeah, let me ask you just one follow up question, Zoo. I can't help it. All right, so for your systems, is your profitability highly correlated to the frequency? Like, if the frequency goes down, does your profitability go down, or is that uncorrelated in your opinion? Or
Yes, it is correlated. Yeah.
Okay, I've
Yeah.
assumed, but I just
Because you also have to understand, let's say, if I have, let's say, 7 trades in a day, then based on, you know, the positive expectancy that I have in the system, the odds of me having a green day when I have 7 trades in a day, those odds are much higher that I close green than when I only have 1 trade a day. Because if I have only 1 trade a day, then my odds are much higher or much lower that I have a net green day, because it's much more spread out over multiple days that those same odds for the positive expectancy play out, if that makes sense.
Yeah, absolutely. No, I
So
appreciate it.
I always prefer to have like a high frequency cycle, because then the odds for me of actually closing green on the day, because I am trading a positive expectancy system, are much higher. Except for yesterday when nothing faded and everything squeezed and I got killed.
Yeah, yeah.
That was
At the
fun.
end of the day, too. Today sucked too.
Yeah,
All
I think
right.
it's. I guess
go
we
ahead.
shouldn't, right? I was just gonna say it's interesting, you know. I mean, like, I feel like as a discretionary trader, it's like a big thing for me. Like when we, an example would be like a peak euphoria environment, you know, which who knows? Maybe we'll see something like that soon. You know,
I
maybe
always
Hollow will.
think we might see it again.
Yeah, maybe Hollow will spark something, but like when we start seeing like just peak euphoria, peak craziness, you know, after that, like going into the days after that, like I am more aggressive. You know, I might push a little more size. I might
Right.
take an entry earlier, and like man, those things really skew my performance.
I think that's that's one of the like the main advantages. I think strengths being discretionary, because you can kind of like react much more based on what you see going on at that time.
yeah.
I was
Oh, for
just emailing
sure.
somebody about that. Somebody asked me if I was going to go harder tomorrow. I was like, I'm 100% going to go harder tomorrow. I always do. That's, I mean, you have
Hollow
Yeah.
might bring some sympathy plays too, but yeah, there's definitely times when my foot's been on the gas. The bank stuff that happened last year, I think March, April, those couple months were a third of my year, just
Wow.
from that
Yeah.
quick little cycle with the bank stuff.
Yeah,
That's
and,
how it
and I
goes,
think
right?
I think maybe if you like compare like fictitious like equity curve growth, maybe doing like going a discretionary way, you have kind of like kind of like stretched out flat periods where like you're kind of like chopping around over, let's say, I don't know, like 3 months, and then during a cycle when you're like putting your foot on the gas and everything working in your favor, then you really make this like growth spurt, right? When like you really make that gain in your equity. I think maybe that's a little bit different from maybe a systematic trader who is kind of like approaching every single day the same,
Right.
that might not have these extreme growth spurts, but they also kind of like, it's more kind of like stable over time, like this really
Yeah.
shallow kind of like growing up
Yeah.
equity curve, right?
That's a good point. Sometimes we press it and we get fucked. So.
Yeah, yeah, true,
Absolutely.
true.
I pressed it a
My-
little bit too much today. I almost hit a max loss.
Oh man, dude.
Well, I was gonna say sometimes after moves like Hollow, I'll be like you, sellers, and try to press it the next day on all these sympathies, and then that press turns into a me getting pressed type of day.
Yeah.
That's happened plenty of times.
And I
All
kind of
right.
just going to end with this too, is I think
Yeah.
that a lot of edge comes from screen time and really having, like you guys keep saying, keeping a pulse on the markets and stuff. I think
Yep.
that is edge in itself. Huge.
And
Oh,
never
I'm
be
sure.
lazy. Always try to find new edge. Like, don't be lazy.
Yeah.
For sure.
Absolutely.
And I'm sure Thiz, as like a discretionary trader, could preach to anybody for hours that, look, bro, screen time is God. Like, you better get that screen time in, get them
Yeah,
reps
dude.
in.
It's all like
Absolutely.
painting a picture, you know? Like you can't. I've used this analogy a million times, bro. Where like you can have the canvas, but if you don't have the brush and the paint, you know, what are you gonna do? Like you don't have the person to paint the the damn thing. Like volume,
Some people
level 2, your chart. Like there's confluence is really where it's at, man.
Yes.
Like if I can have multiple confluences to give me more conviction, like that's it for me, man.
And it doesn't have to be the same kind of confluence for everybody.
Exactly. Yeah.
Right. All right, fellas. Well, hey, seriously, like we can't thank y'all enough for y'all's time. Input was invaluable. The time was invaluable. So appreciate both y'all 1,000 times over.
So much.
Yeah, dude. Thanks
No
for having me.
problem. It was good.
And this was
It's
awesome.
a pleasure, man. It's
yeah,
the first time we've gotten to
Yeah,
speak.
likewise.
but
Likewise.
It's a pleasure,
Good
man.
to see you
All right.
in
So
live.
I'm gonna do this outro thing. It's only gonna take like 20 seconds, but if y'all hang out, we'll chop it up for just a couple minutes after.
Yeah, cool.
Cool.
All right, fellas. Peace.
Peace.